This video reviews Shin-Etsu Chemical's financial results for the second quarter of fiscal year 2025, covering the period from April to September 2025. Shin-Etsu Chemical is Japan's largest chemical company with a market capitalization of nearly 10 trillion yen. It holds the top global market share for PVC, polyvinyl chloride resins, and semiconductor silicon. First half overview. During the first half of fiscal year 2025, the global economy and industries were affected by U.S. trade policies, resulting in unstable conditions. However, as indicated in the IMF's World Economic Outlook released last week, economies around the world have managed to weather the turbulence. On the other hand, the new export controls announced by the Chinese government earlier this month, along with the U.S. government's reaction, have created an unprecedentedly complex situation that requires close monitoring. Under these circumstances, Shin-Etsu Chemical maintained close communication with its customers, continued to ensure a stable supply of high-quality products, and carried out sales activities with agility. As a result, in the first half, net sales increased 1.4%, but net profit decreased 12.3%. The progress rates toward the full year were 53% for operating income and 55% for net income. The progress rate was about the same as usual, but sales and profits declined compared with the previous year, which was generally as expected. Net sales and operating income by segment. Net sales were mostly stable across segments, but operating income declined overall. Infrastructure materials segment was pressured by weaker market prices, especially for polyvinyl chloride. Electronics materials segment achieved higher sales driven by semiconductor and AI-related demand, although profit growth was limited. Functional materials segment saw mild declines due to a slow market recovery, and processing and specialized services segment remained steady but also faced profit pressure. As a result, strong semiconductor-related demand could not fully offset weakness in basic materials and other markets. Infrastructure materials segment. In the PVC business, demand in North America remained strong from the start of the year until around mid-year, but the market has since shown signs of weakening. Prices in Asia and other overseas regions have been sluggish, yet the company has made effective use of its broad sales network to achieve the best possible sales results. Regarding caustic soda, both prices and sales volumes have stayed relatively stable, allowing the company to maintain steady performance in this segment. However, there are growing reports that the Chinese government is concerned about a potential oversupply in the market, and Shin-Etsu Chemical plans to carefully monitor these developments going forward. Electronics materials segment. In the semiconductor market, demand driven by artificial intelligence remained strong, while other sectors showed limited recovery. Given this situation, the company concentrated on supplying semiconductor materials such as silicon wafers, photoresists, and photomask blanks to markets where growth has been solid. For rare earth magnets, Shin-Etsu Chemical met the strong demand from the hard disk drive industry. At the same time, it focused on addressing the impact of China's export restrictions, which were imposed in response to U.S. tariff policies. Functional materials segment. The market for commodity products has not yet recovered, so Shin-Etsu Chemical continued to offset the shortfall in sales by focusing on expanding the sales of high-performance product groups. Consolidated business forecast. Shin-Etsu Chemical states that the business forecast for this fiscal year depends on various variable factors, but they will maintain the earnings forecast announced in July. The year-end dividend for the fiscal year 2025 is expected to be 53 yen, the same as the interim dividend. On an annual basis, the total dividend will be 106 yen per share, unchanged from the previous fiscal year. Although profits are expected to decline this fiscal year, it is at least good that the dividend will be maintained. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,905 yen as of October 24, and the US dollar stock price is $16.15 as of October 23. Thanks to the Saniei-Takaichi effect, the stock price had been rising recently, but after this earnings announcement, it fell about 2.4% in the after-hours trading market. This likely reflects that the results were slightly below market consensus. Current PBR is 2.18, PER is 19.5, dividend yield is 2.16%. Compared to past valuation indicators, the stock price is roughly the same. Due to weak earnings results compared with previous years, the stock has also declined. Conclusion: Shin-Etsu Chemical's first half results showed stable sales but a decline in profits, reflecting ongoing challenges in basic materials despite strong demand in the semiconductor and electronics markets. Overall, while earnings face pressure, the company continues to navigate a complex global market with a focus on high-performance products and stable supply. The results were, for better or worse, in line with expectations.